Are you looking to purchase a house? What does that process look like? We'll discuss that next in A Minute with Marty, so stay tuned. Welcome to A Minute with Marty. Today we're going to talk about purchasing a home and what that process looks like. And this is going to be something we're going to open up to our individual clients, our group clients, HR, business owners buy homes all the time. And today I have two wonderful ladies with me. We have Jessica Threet with Alan Tate and Amanda Mulqueen with C Trust Mortgage. Ladies, it's a pleasure having you today. Thanks for joining us.
Thanks for having us.
We all have, for the most part, unless you're renting, you've purchased a home, and purchasing a home is one of those things that for most people, it's going to be the most expensive thing they've ever purchased. And so today we're going to sit down and just have a discussion on purchasing a home and what that process looks like. So, Jessica, when somebody comes along and it is their first home they're looking for, start us out today. What does that process look like?
Well, usually for me, what I'm seeing is the process starts out with like, okay, stop. We can't go look at a house today. So I think people get really, really excited about the idea of being able to purchase their first home or any home for that matter. And they decide, well, let's just go out there and, do some shopping. And in a different time, I would have said that might work. But right now, what we're seeing is a limited amount of inventory, and but a lot of people still out there actively trying to purchase, and the inventory is getting better, so it's becoming a little bit easier than we've seen, but it's moving super quickly. So it's really important when I talk with someone to tell them about how this process goes because it's moving so quickly. Mm-hmm. And that's where Amanda comes in to help because what they don't think about originally, I think, is what do you need to buy a new home, right? Mm-hmm. And a lot of people who have rented for a really long time believe that they can't buy a home just because of whatever situation that is. But actually, there's things out there that you can do and check into that you just might qualify to purchase a home. And there's things that if you can't do right now, if you can't purchase right now in a short amount of time, you would be able to, you would be able to do that with a little bit of direction. And so Amanda helps with that too. And we'll get into that in just a minute. So the first things I think is like how much house can you afford before we go out shopping for homes, right? Mm-hmm. So I want to talk with my clients about what their credit looks like, how much home can they afford, how much income they make, how much debt they have. All of these things are going to factor into your home buying experience. And it's important to know how all those things work together at the beginning of this to make things run smoother and easier once you do have that contract. Okay, I can't tell you how many times you've seen hiccups and headaches and heartaches over things that could have really been avoided in the last minute of stress of buying a home. So it's really important to get in front of it, I think.
Right.
So Amanda helps with that because when I start talking to clients, one of the first things I'm going to ask them about is, have you spoken with a lender? And because you may think that you can go out and purchase a, I don't know, $150,000, $200,000 home. But when you actually speak with someone, you find out that either you can afford way more than that or you can't. Mm-hmm. Oh, so it's really important that we don't go out shopping for homes for you as a buyer to fall in love with only to be disappointed because we haven't looked at that already.
Right.
So I would be bringing those things up. We discuss those things, and I would then make introductions to someone like Amanda here, who I love very much. So she works with a mortgage company and she can help with all that. And then, so what kind of things, Amanda, would I be needing to tell I would tell my buyer to get things like pay stubs and, what kind of things would you need to make this easy for them, or not overwhelming, because it can be like, you need what?
Right.
Yeah.
Yeah. So pay stubs are very important, bank statements, other type of asset accounts, because like you said, we're going to have to build the whole picture of what their employment and income looks like, what their credit score is, and what their debt. So we're going to put together the debt to income ratio. Each program is going to have different, percentages, but that's really what it takes. I need to look at all that together to kind of put them on the right track. And sometimes, someone wants a certain payment, or maybe someone
Right.
wants a certain rate, so it's important to find out what it is that, that's important to them. And, and who knows, that could change, but that's what we're going to find out, and, work with them and find out exactly what they qualify for. So that way, whenever you do go look at houses for that first time, you know exactly what they can afford. And if they're ready to make an offer when they fall in love with the home, then they'll have the pre-approval letter and you'll be ready to go.
Right.
And one of those other things, talking about, you ladies have mentioned two particular things. You mentioned it twice. Credit score. The credit score also affects the insurance. So, you've got multiple things. Somebody, when they come in and they're looking at a home and they're looking at the loan, what can I afford? They see maybe that loan payment, and then you've got the insurance, you've got the taxes, you got those sorts of things that build in that whole premium. So, when we first got married, we had X, what we thought we would be able to afford, or whatever house, and we looked, and then by the time you add all these things in there, reality strikes on a first time home buyer. And especially if they have no credit or bad credit, those things affect what that first person, couple, whomever buys that first house.
Right. And I think too, it's important that you understand that there are so many different pieces to a house payment. So when you think about paying your house payment, and someone might say, well, I want to keep my house payment to $900. I think it's important that they understand that what escrows are, and that, do you want your house payment to be $900, including your taxes and insurance? Or do you want it to be, that just the principal and interest? And you haven't figured that out. So I think people are, when they think about their house payment and adding in that taxes and insurance, they were going to pay that anyway. They usually are thinking, oh, I want $1,000 house payment, right? But somewhere I'm sure they thought, well, there's taxes and insurance on top of being, homeowner and the maintenance of that. But then when you tell them, oh, well, we can just make this one convenient payment with an escrow account and how all that works together, then they realize, well, oh, maybe I can afford a little bit more, with that. So there's just so many different things that consider. And I really like that you brought up the point about the insurance credit score, because a lot of people don't really realize that matters as far as your insurance premium, which affects your escrow account. Amanda, help me. And then also ultimately your house payment. So.
Exactly. And when we're looking at things like private mortgage insurance, if they're not putting down 20%, then that's also affected by credit score. But buyers have the option, if they're going to put down 20%, usually they can pay those taxes and insurance outside of escrows if they choose to. But like you said, a lot of times people just they want convenience. They want to make one payment that includes their principal and interest, taxes, and property insurance.
Right.
I'm sorry, hazard insurance.
Yeah. Yeah. Now, here's a couple of things people may or may not necessarily look at, especially when they're looking, they always say location, 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 but also location to a fire department, a fire hydrant. Those things affect your mortgage rate and ultimately your payment. So there are so many different things to look at, like I said, the credit score, where your house is located. Another thing is, what's the age of the home they're looking at? They need to remember that too, because that affects ultimately cost of insurance as well. So that how old that home is, has a person had any, if they've had a previous home, claims history, all of those things come into effect. They may see this particular dollar when they roll in and they're looking at this initially, but when you get towards closing and you wrap everything together and you take all those things in consideration, it's going to affect really what they can afford. So it's important, I think, Jessica, on the front end to keep expectations at a particular level, and then kind of take it from there.
Right. And I think it's very important that all those things are known and discussed before you really go out there and start getting serious about putting forth an offer to a seller. And one thing you mentioned a while ago, Amanda, was something about down payment and 20% down. I think another misconception too for people who have never bought a home is that you don't necessarily need 20% down to buy a home, right?
That's correct. There are programs that allow for as little as 3% down or 0% down. If you've never purchased before, you can put down 3%, as little as 3%, or FHA has different down payment amounts. VA, they're all different. So that's why it's important for us to talk about it, put the whole picture together. Tell me, what's important to you? Do you want to live in a rural area, or do you want to live in the city? Like Marty said, location. Every bit of it is important. But I want to talk to a client and see what do they have to put down, and let's start there. Let's talk about what their payment is going to look like. And I can always change the loan scenario. I can always, say someone's going to get a gift and they're able to put down more, and that helps them. And, there's so many factors that go into it, but that's why it's important to have a conversation to talk about, their employment history, what they're trying to achieve. Everything. So it's kind of like this, a lot of the same things that you talk to about them, I talk to them on just a little bit of a deeper level, putting the pieces of the loan file together. But yeah, just letting people know what their options are. If you have 20% to put down, that's fantastic. Because like I said, you can choose to pay your property taxes and homeowners insurance outside of escrow if you want to. But if you don't have that 20% down to put down, it does not mean that you can't get a home. There are options for everyone.
It's cheaper now. It's cheaper now to buy a home than ever, like with interest rates and things like that.
Right. On one hand, there may be more documents and things required these days, but also programs, they make it easier for people to buy homes. If you can provide the documentation and meet the guidelines have been relaxed in a lot of ways to make homeownership a reality for a lot of people that couldn't do that before.
Mm-hmm. And as the real estate agent, I will tell you that sometimes the documentation can be a lot, but it's worth it. And I think thinking through that, ultimate goal of home ownership. So, those different programs and those different abilities to be able to get into a home, because ultimately, if you're paying rent, you're paying someone else's mortgage. That's how I kind of look at it as an agent. And I think that everybody should have the opportunity to at least talk about what purchasing a home looks like for them. Now might not be the time, but we can also help you figure out when and how long it could take you for it to be the time, if you can follow some, guidelines and some, advice on how to get there.
Absolutely. I love helping people, months out before they're even ready. I don't mind looking at a credit report and telling someone, you need to pay down this card. Maybe you need to open another card or be added as an authorized user to your spouse's card, that sort of thing. Because once people understand how credit works and they see their score start to improve, then they like that. They
really
want that. And I want them to get the best rate that they possibly can get. So, if we're going to start looking at something even like 10 months out because the lease is going to be up, I'm happy to help, because it can seem like an overwhelming process, but it's really not. And the sooner you get started and the sooner you understand it, then it just makes it that much more of a smoother, less stressful process.
Mm-hmm. And how,
go ahead.
I was just going to ask, like right now, what are you seeing? Like the lowest, some people think you got to have a 700 or better. What kind of credit scores are you seeing now that are, homeowner, able. Does that make sense? You know what I'm trying to say?
Yeah,
Like,
yeah.
yeah.
Well, at C-Trust, we can help borrowers who have a credit score as low as 620.
Mhm.
So, you know, we
Great.
can help most people. We're seeing, you know, credit scores are a little bit higher, you know, it's our average that we see, but you know, as long as the credit score for decision making is at least 620, and that means if there are two borrowers on the loan, whoever has the lowest middle FICO score, that's the score we're going to have to use. You know, and a lot of times people don't know that. They might think, oh, I have a, or they may have seen their credit score on Credit Karma. And that's a different scoring model than a lender's going to use. So someone might think they have 750, and then when we pull it, you know, it might be a little bit lower than that. But, you know, as long as that middle score, when we pull it's at least 620, then we can move forward. And that's one of the first things that I do when someone completes the application and gives consent to pull credit is I go ahead and look at it, because if the score is lower than 620, there's really no reason to request pay stubs and asset statements and all those things. What we really need to do is have a conversation about what can you do over the next 6 months or so to really get the score up to where, you know, we can get you approved and get you a better rate.
Mhm.
Well, going back to total cost of what they expect to pay every month, sometimes people don't understand. When you look at insurance, you need to make sure you have replacement cost added on that policy. And the reason for that is you may buy your home for $250,000, but if that home burned down in a year, the actual replacement cost on that particular home in today's value is $500,000. So you need to make sure you have a policy that covers if it burns down in a year. You don't want it to burn down. Your mortgage was $250,000. It burned down, but you know it's going to cost you double to replace that home. Well, if you're only getting $250,000, you're going to have to downsize that home. And you know sometimes people don't understand that. And sometimes we'll get a call and say, well, I need to lower my monthly premium somehow. Let me lessen coverage. And that's one of those things that we recommend not to do. You know, in fact, we will not quote it without replacement cost for that particular reason. People have a tendency to have amnesia when events happen. And I want to keep people from having amnesia. And, you know, when events, that's what insurance is for. I mean, that's why we do what we do. I mean, you know, sometimes people complain about, you know, well, I pay, especially on health insurance. Well, I paid my health insurance premium all year, but I didn't ever use it. Well, I always go back to say, well, you have insurance on your home and you didn't use it either. And that's a great thing. But if it ever happens, you want to make sure what you've got is there to protect that asset. And so those are some things to keep in mind, because you know it never fails. Somebody will call and say, you know, can I lessen this up? Now, we don't mind increasing deductibles if you are able to, you know, if that event happens, come up with that deductible. That's not some hindrance to you financially. But on things like replacement cost, those things, you know, we don't bend on. And you know, if it turns around that's one of the things that they say, well, I don't want replacement cost, we won't write it. So it's important to know that.
Amanda, do you guys have a cap on how high the deductible can be on the insurance?
Yeah, the deductible for someone's insurance can't be more than 1% of the loan amount.
Okay.
Yeah.
And like Marty was saying, the amount of the deductible will affect the premium, which also affects, you know, whenever we're calculating the principal, interest, taxes, and insurance, you know, that the total monthly payment. So it's important, you know, if someone, you know, if we're trying to stick to a certain payment, or we're trying to stay within a debt to income ratio and we're close, you know, then we might look at seeing if they can pay a higher deductible to get that lower premium, which equals lower monthly payment. But like Marty said, you know, it's you want to have that coverage, but also this prevents you from having too much coverage and paying too much, or worse, not having enough.
Which is
exactly.
Yeah.
And one thing people, especially around here, don't think about is, you know, where your house is located. Do you need flood insurance? Now, that is something that is not cheap. And in our particular area, most, people don't have to necessarily worry about that. But if you've got your house close to a big body of water, or has a high potential of flooding, that's something you're going to have to think about as well. So, there's a lot to look at. And that's why, Amanda, you mentioned it's good to talk 3 months out, 6 months out, 10 months out. So people get, so they're educated. And that's why we do things like this is hopefully to educate them as well. And because it is a big buying decision, and especially that first time.
That's right. And once you get all that information down and you know exactly what you want to, what you can afford and what price point you need to stay in, then we talk about that, what the dream home looks like within that and how we go find it. And then we go find it.
Exactly.
And the fun begins.
Yes.
And then Jessica and I'll be there to help all along the way, answer any questions, and celebrate that day on closing.
And Marty can tell you all about the insurance rates you can get on that property. Different ones too.
Yeah.
It's just one rate. You can help them shop that, right?
Exactly. Well, ladies, as we wrap this up today, Jessica, have you got any parting words of wisdom?
Parting words of wisdom. One day at a time. You can only do what you can do one day at a time. Okay.
Yeah.
So, make the first step in reaching out to the person that can help you in that moment. Make the decision for that day.
Exactly.
That was deep, wasn't it?
That's some deep stuff right there.
Good.
I mean, hang on. Amanda?
I'm going to live by that right now.
That's right.
Yeah, I'm going to say, if there's something that you're thinking of doing and it makes you nervous, do it. You'll be thankful that you did.
Yeah, exactly. And for me, as you see, there's a lot involved in these things. I tell people all the time, it makes me nervous when someone goes online and purchases their home insurance and don't have a clue what they just bought. And it's the same with you guys in your industry. There's commercials all the time about, you can buy a house doing it this way. And a lot of times you're on your own, or go get, this loan or do whatever. And that's the benefit of what we do. When we consult, when we, educate and give the buyer important information. And I think that's the key to keep in mind when people go to make these kind of decisions and these kind of purchases. So
yeah, and I hear that a lot right now. It's like, why do we need houses are selling like crazy. I don't need an agent to help me with that. But it's because of all these things that you might not think about on your own that can really create issues for you along the way.
Exactly.
But like Marty said, with having the professional behind you that can help lead you, we're not making the decisions for you. We're helping to guide you down that path of what could be best and what your options are. And that's so great. It's really hard to do that by yourself especially if you've never done it before.
Yep, exactly. So true. All right. Well, hope everybody enjoyed this today. The ladies' information is going to be on the screen. You'll be able to contact them if you need their services. So definitely reach out to them. We hope this was beneficial to you today, and thank you for joining us on A Minute with Marty. You'll take care.